deeper into that job data, which did play on investor sentiments in the US. US job growth rebounded strongly in November, beating expectations after an October slowdown linked to government spending cuts. However, the unemployment rate rose to 4.6%, the highest level in more than 4 years, signaling mixed signals for the labor market. Take a look.
A closely watched report from the Labor Department on Tuesday offered mixed signals on the health of the U.S. jobs market. The non-farm payrolls report from the Bureau of Labor Statistics showed employers added 64,000 jobs last month, rebounding more than expected. But the unemployment rate ticked up to 4.6%, its highest level in more than 4 years. And the economy shed 105,000 jobs in October. Still, the numbers may be somewhat deceptive. One economist told Reuters that the unemployment rate, for instance, should be taken with a large grain of salt, given that data collection was disrupted by the record-long government shutdown. And October's job losses largely reflect the departure of more than 150,000 federal employees as President Trump pushes to shrink the government workforce. The Federal Reserve cut interest rates by another 0.25 percentage point last week, partly out of concern for a deteriorating labor market. Economists say employers have pulled back from hiring because of what some described as shock from Trump's sweeping import tariffs. Tuesday's jobs report also showed average hourly earnings increased 3.5% in the 12 months through November, down slightly from the prior month. While slowing wage growth helps the fight against inflation, it could dampen consumer spending, the economy's main engine.
And the United States has paused a $40 billion technology agreement with the UK, citing concerns over London's digital regulations and food standards. Take a look.
Officials have said the US has paused a $40 billion technology agreement with Britain. It's following concerns in Washington over London's approach to digital regulation and food standards. The so-called tech prosperity deal covered AI, quantum computing and civil nuclear energy, and was agreed during Donald Trump's state visit in Britain in September. Britain hailed the visit as proof of Prime Minister Keir Starmer's ability to work with Trump on trade and tech. It became the first country to agree in principle to lower some US tariffs in May. But implementation has been slow. Talks on sectors such as steel stalled, though the two sides agreed a framework pharmaceutical deal earlier this month. British officials confirmed on Tuesday that the US has paused implementation of the tech deal. The New York Times said US officials were frustrated by Britain's online safety rules, digital services tax and food safety restrictions. British ministers say the May tariff deal allowed higher US beef exports without compromising UK standards, and insist digital regulations and tax will not be negotiated away. The White House did not immediately respond to Reuters' requests for comment. The US is Britain's largest trading partner, and its big tech companies have already invested billions of dollars in their UK operations.
And before we end, the story about a group of app developers and consumer bodies in Europe up in arms against iPhone maker Apple, arguing its fee structure unfairly disadvantages European developers. We leave you with that story.
A coalition of 20 app developers and consumer groups on Tuesday called upon European regulators to enforce EU laws against Apple. They say the company's fee structure unfairly disadvantages European developers compared to their US rivals, and follows a recent court decision in the United States. The EU's Digital Markets Act mandates that large tech platforms, labelled gatekeepers, facilitate in-app transactions outside their ecosystem at no charge. The coalition's appeal reflects concerns over a disparity following a US court ruling that restricts Apple's ability to impose fees on external transactions. The European Commission earlier this year fined Apple $588 million for breaching the DMA by obstructing developers from guiding users to alternative payment methods. In response to the EU ruling, Apple revised its terms. The Coalition for Apps Fairness represents firms such as Deezer and Proton. It argues that these revised fees still violate DMA stipulations and says that US developers benefit from more favourable terms after the court decision.